Hello and welcome to another update video about Natgas. So we want to start here by zooming out first, take a look at this entire decline of this high in November, end of November. I just want to show you this 5-wave move to the downside, which eventually should complete this entire correction on the Natgas chart. So we came down in a wave 1 here to the low in December. At the time, we also did expect a pullback, which happened. I think it maxed out what it should have done at the time. Peaked then around middle of December and came down in a very long third wave. We've now seen possibly the fourth wave already, but I would still like to see a little bit more of an extended fourth wave before we then come down in a fifth wave. So I'm still eventually, focused on another low for Natgas, ideally. So that is and remains the primary expectation, has never changed on the chart. So new lows now without getting a stronger wave 4 would still be in line with the higher level primary expectation. Still though, it would be great if we see a little bit of a stronger wave 4, because so far what we've seen was a bit too shallow for a wave 4. I mean, what you normally would expect, if I draw the Fib retracements just of this, for this wave 4 that are relevant, they are basically the targets that you normally want to see. I mean, at least I wanted to see 320, the 23.6 retrace, but it's not happening at the moment, at least not. So we need to keep here an open mind that it can still happen. I would still like to see it, but of course, the lower we go, the less likely it will become. We're gonna zoom in a minute. So this is sort of the ideal range for a wave 4. We can always only look for ideal ranges. If the market in the end decides to do something different, it is what it is. That's why there are zero certainties and 100% probabilities in these markets. So it's all about probabilities. It's a probabilistic market, and we need to think in terms of probabilities. So this is still my, I want to say wish, but also, as an analyst, I'm looking for ideal structures because they are what most likely works out. Of course, not always, but I have to focus on what is most probable. Clearly, by pulling back so much here now and really maxing out what it should do in the current scenario here on the downside, it increases the likelihood that this scenario will break and that we will head directly to new lows without making that higher wave 4. And then we have to assume that the wave 4 already finished here, but it's not ideal. I just say that, right? It's not ideal. First of all, maybe the question answered, what would happen if we make new lows here? Well, first of all, if we make new lows, that would mean we have to go below $2.07. That's anyway the primary expectation eventually. Question is, does it happen directly, or do we take a little bit of a divergence in a C wave to the upside before we come down? Not divergence, diversion. Now, if we make a new low, so what are the support levels? Relevant support levels are now 215. And at the moment, I'm still keeping this scenario on the chart that this is just a B wave to the downside, which eventually can move up in a C wave. The reason is the move down is currently in 3 waves. So at the moment, I have no reason yet to count it as an impulse, but that might change, of course. If we drop substantially below 215, we've got 207. And then I could still keep the B wave scenario alive, even though it's of course then not great. But B waves can do funny things. The maximum a B wave should really overshoot to the downside is the 1.38 retracement at 172. But this is really the maximum I would allow that B wave to go. It is quite a bit of a distance, and then we need to see structurally, is this actually still a B wave, or are we already coming down here in that 5th wave? Here. So just to let you know those key support areas, right? So that you're aware of them. Again, ideally it would be ideal to turn around now, but so far the signals to the upside are too weak. We saw yesterday a bit of a reaction, but it's just too weak what's happening here. And by the way, Let me change the background color a little bit of that yellow box. It's a bit too bright. Right, so like that. And so to answer the other question, what would happen if we make a new low? What is eventually the target? So I'd be looking at something around the $1 mark. Yeah, so it's quite a bit. But yeah, I've been showing you this monthly MACD, which has been so bearish since December. And I think that was a good guide in remaining on the bearish side here for Natgas. Here it's still increasing in negative momentum, this monthly MACD, and therefore I don't think the $1 level is completely off the table here or unrealistic. So yeah, but what we can draw now is a nice trend line. Yeah, so it's actually very well defined. So my point here is that the downtrend is going to continue as long as we stay below this trend line. So you can put that trend line on your chart, and if we see a break above the trend line, that would be a interesting signal that the move down is possibly over. But for now, we haven't seen that yet. So we have to be focused on the downside until we see a break. And depending on how low we go, it's either a B wave or it's already the wave 5. Okay, and that's my best assessment of the Natgas chart at the moment. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.